Hey John, this is Ryan from TrendLizard.com. Great to hear from you. Thanks for being a long-standing member of the TrendLizard community. Always love seeing your emails. I'm doing well. My son's doing well. Thanks for asking. And thanks for the email. I'm going to take a look at those three those three tickers that you sent to me this weekend. I hope you had a wonderful weekend, and we are going to take a look at Comcast, Exxon Mobile, and I think Montage Resources or something to that effect. So we're just going to go down the list as you sent them to me. We're going to start with Comcast, CMCSA. It was incepted back in 1988, a long time ago. Had a little bit of action here. I can try to label it all. None of it really matters too much because what we have here is a very clear ABC pullback. It's actually a double correction. It's more of an ABC X ABC pullback. This pretty much resets the charts. When you get a 10-year pullback, that's a clear counter trend move that gave way to a larger trend. There's not a lot of function or purpose in trying to pound our heads on what happened before that. This reset the charts. It's a 10-year move. We're not really looking to trade anything on any longer time frame than that. So that kind of sets us where we need to be, knowing that the trend is up from here. So that's our starting point in 2009. So I've labeled this as a 5-wave advance off that 2009 low. It took me a long time, I'll be honest with you. I looked at this stock in many different ways, and I'm going to show you why I settled on this labeling right here. And it's because when I went to a linear scale like this here, where each box is 2.5 points as opposed to a percentage move, it becomes a little bit more clear. It's a little bit easier to find where the larger degree pullbacks happened, and also the extent of this pullback becomes a little more clear. So back to kind of the starting point, the log scale, I'm comfortable calling this a 5-wave advance that completed in early 2018, and then a large counter trend pullback has taken place since then. So let's go ahead and zoom in a little bit. This takes a closer look at that pullback. Here's the high that was recorded to me to that 5-wave advance off the 2009 low, and then you have the A, the B, and the C. It doesn't, the overall form jumps off the charts as a 3-wave move, a little bit of a runner. The B sets a new high, the C doesn't quite get back to the A low, but that part's fairly clear. If you look at the internals, it's not as clear. And that was the case with a lot of what's going on with Comcast. I had a tough time with this one, to be honest with you. It took me longer than I expected. Normally it doesn't take me too long, but I had to look at this thing so many different ways. With that said, it looks like a counter trend pullback. That's a good thing. Obviously, there's been a large recovery in 2020. Amazingly, when you gain 12 points or like maybe 40% of your value, you think that's a pretty good jump, but that's actually lagging behind most other stocks, it seems like, with what's happened in 2020. Nevertheless, let's go ahead and zoom in and look at this advancing action in 2020, see what we can figure out here. So it's a tricky move, like I said. It's not super apparent exactly how to label it, and I'll show you why, because I tried labeling it a few different ways, or a couple different ways. In a trendy way, if we wanted to label it trendy in a way that allows us to say that this 3-wave pullback off of the 18 high has ended. So trying to label it as a trend. The first up leg would be a leading diagonal, because wave 1 and wave 4 overlap, which can't happen unless it's a leading diagonal. But then if we go to the larger degree, 1, 2, 3, 4, 5, we again get overlap between that 1 and a 4. So if we wanted to call this a trendy move, based on this labeling anyway, one of the two options I'll show you, it's a leading diagonal first wave within a leading diagonal overall up move in 2020. Not great. Obviously I don't want to, it's hard to get excited about a labeling like this. It just seems unlikely, but that's one way that we can find to label it as a 5-wave move. That said, we've had a pullback off of July's high. That would establish the high so far to this recovery. It looks like it could become bigger, and if it does become bigger, that might actually provide some clarity. If we get some type of larger pullback down into this yellow support area, might actually open up a buying opportunity, because if we get a larger counter trend pullback, it's pretty easy to buy it, because it just indicates that this advance off of March's low is going to continue no matter how you want to label it. So if you get a move below 43, it's going to indicate a larger pullback off July's high. That would be a good thing. I think that would be the best thing that could happen for Comcast. And then we would just look for a low in this area. If you get a leg down into this area and see some strength out of there, it becomes a buying opportunity. So now let's look at a different way that we can try to label it. This shows you another trendy attempt at labeling this move, and it's a series of first and second waves, right? So you have the first wave and the second wave. Everything else is a big, large third wave on the blue time frame. But what you have is you have a smaller degree first and second wave, and then a smaller degree first and second wave. The good news is all these second waves are finding support in the yellow Fibonacci retracement areas, and this one might do the same. It found support early on in the pullback. Now, this labeling is possible, and if you own Comcast, you can kind of ride with this labeling in your mind if you're willing to do so. But the moment that this labeling becomes negated would be a move below 40.50. So if you're trying to just hold on and hope this thing turns into something more purposeful, you can technically do so as long as it's trading above 40.50. But if you get a move below there, that completely negates this possibility. You're probably looking at something else that happened to the upside. But in all honesty, it's not clean enough for me to really like it or really push Comcast as an opportunity. And it makes me wonder if maybe we're not still in the counter trend pullback that started back in 2018. Maybe this is an X wave up and then you'll get another ABC down, something to that effect. A move below 36.50, which is a far ways away at any point, would be an indication that this is not a trendy move and that you are still in that pullback. Obviously, that would take a lot of work to get there. I would say if you're trading it, you can own it until it moves below 40.50. If it moves below there, I would get out and then just wait for a larger pullback just for confirmation. But that's about it. If you're not in it, I personally wouldn't be buying it just because I'm not a huge fan of what's happened off of March's low. There's just a lot of things to be desired, and it's just not a super clean pattern in my view. But if you are going to do it, and if you do own it as long as it's trading above 40.50. So there's that one. Now let us go ahead and take a look at Exxon Mobile. Everybody knows this guy. Here it is. This is as far back as our data goes, and that is back to 1980. And you have yourself a very nice 5-wave advance into the 2014 high. Super clear, beautiful move. Exxon Mobile, what a stud. Had a very nice subdivided third wave advance here. Every up leg takes on a nice 5-wave form, as you can see. Once it hit its head in 2014, it tanked, most specifically in 2020. It really fell to bits there and retraced 61.8% of the advance off the 1982 low. So that's pretty fortuitous and a nice move. So off that low, it's bounced, and let's see the significance of that move by zooming in a little bit more. So first, here's that 3-wave move off of the 2014 high. You can see it's taken a very nice 3-wave form. The fact that it's giving us some strength off of that low is a good start, but obviously we need to take a closer look at this action off of that low to determine if this large 3-wave pullback is officially over and if we can expect the overall uptrend to resume from here. So here's a look at that advance off the 2020 low. This is the only way I can find that you can label it as a trendy move, and it is a tough sell for me. This basically looks like a 3-wave move off of March's low, which is the only real upward inflection that's occurred in 2020 for this guy. It looks like a 3-wave move that I'm trying to label as a 5-wave move. Basically, it seems like an effort to call this a trendy move. Again, it would be a leading diagonal because the 4th wave low, official low, is here, which overlaps with wave 1's high here, which can't happen unless it's a leading diagonal. Makes it less likely that this is right if you're talking about leading diagonals. Despite all that, you've gotten a pullback off of June's high, which is currently a 3-wave move that has set a new low. And it's found a low so far around a 61.8% retracement, so that's not a bad thing. For me to be interested in this guy, I would need to see some strength and trade above 44. That would be a good indication that regardless of what this mess is back here, we would be confident that this is a counter trend pullback off of June's high, and that if you get a move above 44, you're going to get some kind of other up leg here, whether it's a C wave or a third wave or whatever it is. It would look like a buying opportunity at that point. If instead it continues down, doesn't go above 44, and it moves below a 61.8% retracement, which is around 39, 61.8% retracement of this up leg here, I wouldn't really want to, I wouldn't be too excited about it as far as any long-term growth potential. Now, if you want to see how I think this move is actually labeled, it looks something like this. This is that 3-wave move I was referring to. Doesn't look like a 5-wave move. Even this is kind of rugged. I mean, you have this kind of funky leading diagonal for wave A and then a B and a C. Regardless, it looks like a 3-wave move. So I think what's going to happen is we're currently in a B wave, But once you see some strength, even if you just want to trade the C wave up, that's okay. You can get a very nice trade. Obviously, wave A doubled the price of this guy, or not quite, but it nearly doubled it. So the move for wave C should be substantial too. So a trade above 44 makes this guy fair game. If you get some trendy upside action and it trades above 44, it can certainly be a tradable guy for you. Again, if it moves much below the low that's already occurred in late August, just this past week, I'd be worried about it. I mean, it might still just be a B wave, but it's going to pretty much evaporate the long-term potential that this big three-wave down leg is over. How it'll eventually sync up, who knows? I mean, maybe this is an X wave, again, or whatever it is. But if this move is not trendy off of the 2020 low, it has to mean that this counter trend move is not yet over, So that's the concern. But again, if it gets above 44, it becomes a tradable entity for you, and you can certainly own it as long as it stays above the lows that are established for this down move that it's currently in. So there is that one. Now let us move on to MR, which is Montage Resources Corporation. The first time I took a look at this stock right here, this chart right here that shows all of its data back to 2014, I thought this was going to be my least favorite stock of the three, just because the trend has obviously been down, right? And even trying to label this action here from 2016 isn't easy. I mean, it's not pretty, whatever it is. It was a down move. The only hope that this stock has to be anything worth our consideration whatsoever is if a major low occurred in 2020. Lo and behold, there's some beautiful action happening off of this low in 2020, and we will take a look at that. And I'm guessing it's why you sent it to me, unless you have some other connection to this guy, but it has some pretty good action. So off that low. So here is that action off the low. This is March's low here. Beautiful 5-wave advance into April's high. Very clean, very nice. You have a pullback off of that high. It's a 3-wave counter trend move that found a low close to a 61.8% retracement. Not dead on, close enough. Once you had that low from the 3-wave pullback, we now have a nice 5-wave advance again and another 3-wave pullback, which appears to be a second wave. So this is all bullish stuff for sure. I mean, you're getting all your trendy action to the upside and all counter trend movement to the downside. So all those things pave a path for higher prices, as you know. So one of the keys here for me to trade this guy is that it needs to stay above 475. If it moves below, maybe give it a little more room, say 465. 475 is right around a 61.8% retracement. Give it a little bit of room. If it can stay above that level and continue moving north off of August low, man, I mean, this is the stage will be set for a major advance off of this low. A move below 475, you have to back away from it. That would be an indication that this pullback that happened back off of April's high is not yet over. That opens the door for too much wonkiness from there. I would be much less interested. But if it can stay above that level and continue to advance, the stage would be set for a much larger move. So let's go ahead and zoom in even a little bit more and just look at what's happening off of July's low. This is that advance, and regardless of how close you get to it, to the price action, these are 10-minute bars here, you can continue to see trendy upside movement that's happening. And that is a ton different from what's happened since its inception until now. So that is interesting to see such a shift from trendy downside movement to clear trendy upside movement on all the time frames. So here are some other levels to keep an eye on other than that 465 level I mentioned. It should stay above 510 if the low for this pullback off of August high is already in. If you move below 510, it probably means this pullback right here is not yet over. Then you got to focus again on that 465 level. It needs to stay above there, but you would expect a larger pullback. On the other side of the market, if you can get a move above 6, it's going to be a good indication that this is a counter trend move. We believe it is already because it's a clear 3-wave move to the downside. Counter trend moves play out in 3 waves. So the odds are good, but a move above 6 is just additional confirmation and could be a really good buying opportunity from there. This is one that's going into my own watch list just because I really like the near-term action and the shift from trendy downside action to trendy upside action. So I would be a buyer. I think this guy is good. I think it has a lot of potential to give you some serious third wave advance type movement to the upside, but it needs to stay above 465 to keep it interesting. And a move below 510 would be an indication that this pullback in August is not yet done. So, hey, John, I hope that's helpful. Again, thanks for sending me the email. And again, I hope you're doing great, and I look forward to talking to you again very soon. Have a wonderful night. Take care.